Hey everyone, welcome back to the channel, which is all about income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds to reach fire as soon as possible. And it's once again time to review my entire portfolio from A to Z. That's right, your favorite video. So if you're watching this video and you're newer to the channel, make sure you're watching the latest portfolio unveiled video. This is update number 20. Wow, number 20, can't believe it. For December of 2022, I have a YouTube playlist dedicated to all my portfolio unveils, by the way. So make sure to check out that playlist and you're watching the latest update. Now, a quick note about my investing style in case you're new to the channel. I am a long-term or forever term, if you think about it, buy and hold, income focused or income oriented investor. And the primary objective of my strategy is to generate high and consistent passive income via dividends and distributions every single month as safely as possible. So most, if not all of my returns, everyone, does not come from capital appreciation or stock price increase. It comes from the consistent passive income that my portfolio generates. So how do I achieve this? Well, my portfolio primarily holds, like we will see shortly, funds that invest in blue chip, dividend stocks, or even indexes, and use income enhancing strategies like covered calls, like leverage, and sometimes a combination of the two. So they provide fairly consistent high income, and the intent is really to hold them, not trade them or sell them to make a profit when the price goes up, but simply to collect the passive income forever. So what will I show you in this video? Well, I will quickly show you an overview or a summary of my 6 investing accounts using Passive, a really cool little portfolio tracking tool software that consolidates all my accounts together, all our accounts together in one place, so it's easier to digest. This is just to prove you that all the numbers on my thumbnail is true. And then I will show you my portfolio in an Excel sheet where I will go through each fund that I have and any changes I made since the last portfolio unveil, which, it's a lot more easy to digest in Excel than showing you each account in Questrade. So remember, you could download the Excel file, which has my entire portfolio, including my book prices and everything, on my website, passiveincomeinvesting.ca. Just click on free tools at the top and it will be the very first download. So without further ado, time to review my entire portfolio from A to Z. All right, everyone, let's do the portfolio overview or the bird's eye overview with Passive here. So I finally cracked $1 million in value. I was actually a lot higher, but the market has gone down the last couple of days. So I'm at 1 million, just over a million, 8,000 here of total value. I am filming this on December the 7th. So this is Passive. This is where I group my 6 investing accounts together. I strongly suggest you download it. There's a free version and there's an elite version. So it's completely free if you just select the regular version. But if you want the elite version, it's completely free if you use Questrade like me. But if you want 50% off, use the referral link in the video description below. Download Passive. It's pretty cool. So as you all know, I have 6 investing accounts and I won't go over the details and structure here because I recently released a video yesterday which goes into my portfolio breakdown 100% complete. So I go over the structure of my portfolio, the taxes of my portfolio, the tracking, what do I track, my goal. So if you have questions on what I'm about to present to you now, if you're a bit newer and you have questions about my portfolio, the structure, watch that video. It will answer pretty much all of the possible questions you have about my portfolio and my strategy. In this video, I'm sticking to the holdings and the amount. So my main portfolio here, the total value right now, which is of course the combination of our 2 TFSA accounts and our joint cash account, is 592, a little bit over 592. For the retirement account, it's a little over 416. You put that together and you have a little over $1 million. So now let's check out the breakdown in Excel. So first we're going to cover the retirement accounts here. So we're going to look at Erica's RRSP, my RRSP, and my small LIRA account. And afterwards, we're going to look at the main portfolio, which is a combination of our 2 TFSA and joint cash accounts. All right, so we're going to start with the retirement accounts first. And by the way, to download this Excel file that I'm about to show you, that I'm showing you right now, if it's maybe too small for you, don't forget to go on my website, click on free tools, and it will be the very first download. Just click on this red button here, except don't do it with Firefox because it won't work. Also, if you want to follow my portfolio live, download a really cool app that I just joined as an ambassador. It's called Blossom. There's a link in the video description below. There's a referral link. So if you click on that, you'll be able to download. This is a mobile app, really cool. It's only for Canadians, however, and make sure to follow me. My username, like it shows in this picture, is Adrian PII. So you could see how my portfolio is doing on a daily basis. All right, so going to my retirement accounts. And by the way, just as an FYI, I didn't put my retirement accounts here, only my main portfolio, because the retirement accounts are pretty much all American and this app is more for Canadian investors. So what are the changes that I made from the last update in the RRSPs? Well, I did make some changes. So let's go through the RRSP tracker tab here to check them out. So what I did is, number one, I decided to sell all the GOF, or the Guggenheim Opportunities Fund, in my wife's RRSP account, and I swapped it out for more HYLD.U. So why did I do that? You could see here GOF is gone, right? Why did I do that? Well, because GOF is primarily fixed income. I feel as a long-term investor, I really don't need fixed income. It's kind of, it's not a bad fund. That's definitely for sure. If you like golf, if you like the consistency of it, keep it. But it's mostly all very boring fixed income stuff. I swapped it out for more HYLD, which I think had, now it has almost 14% yield. But I thought that is just a better long-term prospect. So I simply swapped out my golf for more HYLD.U. Just a reminder that I'm keeping everything in US currency in our retirement accounts. That's why I went with HYLD.U. So very interesting option if you're Canadian and you want US currency in your RRSP. You could always go with HYLD.U. So it's Canadian listed, but it's with US dollars. So I added a position there. That's the major change I did. Wrong tab. That's the major position I did here. Major change I did. And I also started a small position in one of the new BlackRock covered call fixed income ETFs. I bought 2.2K of HYGW. So that is the change I made with my RRSP account. You could see here, I added it right here. Small little $2,000 position. That's basically where I reinvested my monthly income for the month of November. So I put it in HYGW. Really cool new covered call ETF on fixed income. Very high yield. I mean, you could see that I'm making a dividend yield of about 22% now. Keep in mind that the dividend rate here is based on the last 3 distributions. So very interesting. If you haven't seen it, I recently came out with a video on this ETF and its 2 sister ETFs as well. So make sure to check it out. So let's just go through the positions one by one here, like I normally do. So we'll start with my RRSP here. You can actually see the return, by the way. So like I explained in my portfolio explained video that came out yesterday, I don't want to go into this too much here, but the only thing I pretty much track for my RRSP, since no money is coming out, it's all staying within, is simply how much that I put in over the years and how much is it worth. So right now I have an unrealized gain, that's because I didn't sell anything, of 34%. Same thing in my wife's account. So let's go through them one by one. So of course you have CLM, which is one of my biggest position, actually, at 25%. I really like CLM. So unfortunately, well, that's just how it is. They reduced their dividend to $1.47 from $2.16 starting next month. So starting next month, this 217 will become 147. But even if I do it, I'll still make a yield of over 14%. So I'm very happy about that, but I'll change it next month. You'll see that next month. So CLM, still doing what it's supposed to do. It just resets their annual dividend at 21% of NAV. SVOL, my secondary position here, second biggest with CEFD. I really like SVOL, the epitome of consistency. Have a nice 16% yield on this one. Their dividend has remained unchanged, 32 cents for the last 7 months. And I actually, just today, I interviewed and did a Q&A with Simplify ETF. So look for that video in about a month's time, but I couldn't be happier with SFOL, the epitome of consistency, a nice 16, 17% yield. I have a 16% yield, so I'm very happy with that. Just a cash cow. CEFD, another big position. This is my all-in-one closed-end fund solution. So this is an ETN that basically tracks an index of some of the best closed-end funds in America. And on top of that, they add 50% leverage. So I have a yield of just under 14%, which is not so bad. This one has stayed relatively consistent as well with the dividends, or the monthly dividends, although they can vary monthly. Another ETN that I have also from eTrax is BDCX. So this is a smaller position. I got it recently. I kind of like BDCs. They are income oriented. I made a video on BDCs lately and some options, and BDCX was mentioned in that video. Make sure to check it out. So I'm making 15.86%. The only downside of this ETN is that it's a quarterly payer, not a monthly payer. So it's actually the only stock in my entire portfolio that pays quarterly instead of monthly, unfortunately. ORC is ORC, definitely the lowest yielding one and my most crappy position, I would say, in my RRSP. But another 16-cent distribution was declared, so hopefully this one will go up with time, or the distributions will go up with time. I am down significantly on this. I have a almost a $25 book price, and right now it's something like $10, so I'm down more than 50% on it. But I didn't realize any of the losses. I'm still making $100 a month, so I'm just gonna wait this one out. We'll see what happens. The next two are SLVO and USOI. These are commodities covered call ETNs from Credit Suisse. So the silver one, they announced the distribution that they just announced wasn't as good as the last one, but on average, from the last three distributions, I'm making a yield of a little under 11%, which is not so bad. The oil one has been absolutely monstrous yield, 28% on average from the last three dividends. And by the way, for asking how do you get the average, all I do is take the last three distributions, multiply them by 4. That's all you have to do to get the average for the year based on the last three distributions, because there's 12 months in a year, right? So you take the add up the last three, multiply it by 4, which will make 12, and that will get you your average for the year. So no complaints for SLVO, USOI. I'll probably keep them long term and just collect the income as I go. It's fun to go and see. It's kind of like a surprise every month to see what the dividend is. My new position here, the iShares High Yield Corporate Bond Buy Right strategy, which just means covered call strategy. So this I recently added, so very, very small position here, only 1%. I'll probably get, add to it and get it up to 10K as a secondary position as well. But I've been extremely impressed with the monthly dividends. 4 have come out and they've been absolutely monstrous. Will they last forever when the market returns to normal? I don't know. We'll have to wait and see, but I want to wet my beak with this one, so we'll see how it goes. And last but not least, my Ether position here, which unfortunately they reduced the dividend in the last month, but based on the last three, including the reduced one, I'm still at over 10%. We'll have to wait and see for this one. This is really a long-term play, but these guys are all going to be secondary positions, whereas these three are going to be my primary position. So that's my RRSP, guys. Not really much to talk about except the new addition that I did. And it's all about just biding my time, getting high yield, and reinvesting the income to grow the RRSP over time. My wife's RRSP, the strategy is a bit different. I'm going more conservative with just the more boring funds, and it's on drip. I don't even really monitor it. It's doing well. My three main positions are HYLD.U, QYLD, RYLD, and also RIV and RA. So HYLD, as you know, it's one of my favorite funds of all time. It's my biggest position in my main portfolio, which we'll see in a second. In here, you have, my opinion, the best of the best when it comes to covered call ETFs in America. QYLD, RYLD, XYLD, JEPI, RN, HYLD. Hopefully they add JEPQ eventually, which is the competitor to QYLD. I have a feeling they will, but these are just accumulating. They're just dripping away. RIV is a all-in-one solution, a little bit more moderate than CEFD. So this is just my all-in-one solution where it's a closed-end fund that holds multiple closed-end fund, and the manager is simply looking for the best closed-end funds that are trading at discounts. The ad here, really, really cool. And of course, I have my real assets income fund, which has to do with, like the name says, real assets, managed by Brookfield, someone who I trust when it comes to real assets. So it's going to have infrastructure stocks, real estate stocks, natural resources, and it has both fixed income in here and stocks, but there's leverage. So pretty boring. It's just chugging along and dripping away. Nothing really to report for Erica's RRSP, except of course the swapping of GOF or GOF, got rid of that and just put it into more HYLD.U. My small LIRA here, which just has the Bitcoin covered call ETF, I'm down significantly on it, but I don't really care. This also is on drip, so it's just going to drip away, and hopefully when Bitcoin goes back, or if it does, this is, I kind of took a chance on this. We'll see what happens. But I have a good feeling about this long term. Another thing that really been helping my RRSP is the exchange rate. Because this is all in US dollars and I track everything in Canadian dollars, my totals, the higher the US dollar goes compared to the Canadian one, the higher my income is. So my all these three accounts together in Canadian, including, with the exchange rate at $1.35 here, generates a little under $5,800 a month, which is all being reinvested either manually, my RRSP, or on drip, Erica's RRSP and the LIRA. So that's it for the retirement accounts, guys. Let's go to the main portfolio now. All right, everyone, the main portfolio, this is what I show in Blossom. So this, of course, is a combination of three accounts: my TFSA, my wife's TFSA, and our joint cash account. So first, let's cover any changes from last month. I did not sell anything, but I certainly added some stuff. So in November, I added 5K to ETHY, which is the Ether covered call ETF. Because I had put 5K in BTCY, and I kind of want to keep them 50-50 for now. So I added a little bit of ETHY, 5K, which I averaged down on. And of course, in December, like you saw on Blossom, my Blossom update, I added 5,000 to FTN. So two holdings that I was, that I'm very much down on, but I averaged them down. So I have my average price on the Ether is $5.98. Right now, it's much lower than that, obviously. But on FTN, I lowered my book price from $13.99, I think it was, to $12.79. So my average yield is just under 12% now, which I'm a lot happier with. So yeah, that's pretty much the changes that I made, everyone, from last month. Let's go through the holdings one by one now. So of course, the first one is HYLD. This is my biggest position and probably my most favorite ETF right now. They added JEPI recently, like you saw, I made a video on it. So I couldn't be happier than with HYLD. The 14-cent distribution has still remained at 14 cents. And on average, my book price is $15. I'm definitely looking to add more to this because right now it's about $12. My average yield is 11%, but the average yield right now is almost 14%. So this is obviously one of the monsters in my portfolio. So yeah, couldn't be happier with this one. I love the recent changes that they made. HDIV is Hamilton ETF's other all-in-one covered call ETF, which focuses a little bit more on the Canadian stock market, whereas HYLD focuses on the US stock market. They also made some changes here. They added HFIN in here, which I like. So now this is not a pure covered call strategy because HFIN has 25% leverage but no covered call. So really nothing to report here, guys, on these ones. They haven't missed a dividend at all. HDIF is another great all-in-one covered call solution from Harvest. This combines 6 of Harvest's best covered call ETFs and adds 25% leverage. Same thing here, nothing to report. All, just chugging away, getting that passive income from these guys. So these three together make up almost 35% of my portfolio. And I'm assuming that's going to just keep getting bigger and bigger because I love the all-in-one funds. BMAX, I haven't bought any yet, but I'm probably going to be doing it in the next couple of months. I know some of you have been asking, when are you going to buy BMAX? I'm just looking for the right time to buy it. The yield is a little over 9%, so it's a bit lower than HDIF and HYLD. It's pretty much on par more with HDIF, but it's not really surprising. I think BMAX is more of the conservative one because it has 30% in more preferred stuff and 70% in equity, whereas HYLD and HDIF is 100% equity. So that's it for the 4 all-in-ones. Don't worry, guys, I'm going to get some BMAX soon. And then for the other two ETFs, of course, it's the ones that I'm down the most on. BTCY, ETHY, crypto took a big tumble because of that whole FTX scandal. If you haven't seen my interview with Purpose regarding the safety of these ETFs in case you own them, make sure to check out that video. I know a lot of people are against owning Bitcoin or Ether. That's completely fine, guys. If you don't believe in it, if it's too risky for you, completely normal. Don't invest in it, not a problem. I personally have set an objective where I will not make these two more than 10% of my portfolio. Right now it's at 10.77, so I'm not going to be adding to these in a while because I want to be responsible anyway. I got my limits too, but I would only get Bitcoin and Ether because they're the two biggest ones, and I would only get them with covered calls. So although these are my lowest yielders because the dividends have been reduced, don't forget that the tide could turn very quickly on crypto, and I'm expecting that the yields and distributions go up as the asset prices go up. I think that will only happen when regulation comes, but hey, I'm not going to speculate on that. All right, so now let's go through the closed-end funds, which of course includes our favorite, the split share funds, the most exciting one. So EIT, not a split fund, but a regular closed-end fund. This is probably going to be the biggest winner of 2022. It's been performing very, very, very well. 10-cent a month dividend has not changed. I'm making, according, with my book price of 10.65, 11% yield plus. I couldn't be more happy with this one. 8% of my portfolio is in EIT. So really, really good. It's growing. It's at like $13, $14 now. So really, really awesome fun here, guys. I'm not going to be investing in it now because I think, there's probably better opportunity when oil and financials go down, because this is very heavy on energy and financials and healthcare as well. The reason why it's doing so well is because it has no tech stocks, and that's what really went down recently. So DFN, no missed dividends since the 4 missed ones in 2020. Sorry about the noise, guys. There's people doing renovations here. Not much I could really do about it. So yeah, DFN, consistent 10-cent a month distribution, no problem. Haven't missed any. FTN is where I recently added $5,000 more, so I have a total invested of $25K now instead of 20 in FTN, and my book cost is down to $12.79 with a yield of just under 12% here. Nothing to really report. This is one that I feel, because the premium percentage is really low, it's a good time to pick some up, and that's why I picked some up in December, guys. FTN. LBS, SBC, nothing to report here. So as we know, this is what covers my Canadian financials. It's all Canadian financials, making really, really good yields here. So, I'm going to keep these, did not add more to these yet. GDV, the Global Dividend Growth Split Share Fund from Brompton, one of my favorite split share funds, very, very well diversified, holding strong, still didn't miss a dividend. I personally never missed a dividend on this, and the fund has never missed a dividend. Really, really good stuff here. DGS, also a good time to buy it because the NAV is actually pretty close to the stock price. You'll get an 18-19% yield. So this is your diversified Canadian dividend stocks, pretty much the competitor to DFN. Just remember, if you're probably going to miss dividends once in a while with DGS, that's the price you pay for 18% yield. I've personally missed 2 dividends, both in 2022, but this fund has missed 26 dividends since inception or more. This is I updated it in November 22, so it missed 26 dividends out of 179. Really, really not so bad. Really good fund. Make sure to always look at the total returns, guys, not just the missed dividends. PWI has gone up very hard in the last couple of weeks, which is good news. I didn't add any more to it. I had bought it at the beginning once it first came out at 9.78, so I'm down on it, but I'm making a solid 8%. It's one of my lowest yielding ones after the crypto one. So the more boring it is, and this is definitely boring in defense of sustainable power and infrastructure stocks, can't expect that much yield. ENS, so Enbridge actually announced another dividend raise, really, really cool, which just makes ENS stronger and more sustainable. This is the split share fund that has the highest unit NAV, and I feel will probably never ever miss a dividend. They never missed a dividend here. RS, I think, is also a good time to pick some up. I'm actually thinking about it, buying some next month. So real estate has, RS is just a collection of 15 big blue chip REITs, mostly Canadian. It's gone down the last couple of months. But the unit NAV is still $23 plus, well ahead of that $15 unit NAV threshold. So yeah, the two split share funds from Middlefield are basically your safest split share funds, and I couldn't be happier. 11.72 with ENS, 9.66 with RS. But right now, RS is rocking a 11% dividend yield. And along with the rule where I say maximum 10% in crypto, well, I also have a rule, personal objective, at least 10% in real estate. Kind of like a hedge, just makes me feel better. Again, if you want to know about my objectives, my tracking, my strategy, the taxes on my portfolio, check out the video I released yesterday, which goes through, all of that stuff. So now, total invested, let's go through the summary now. So I am currently making $58.49 a month with this portfolio of passive income. Couldn't be happier with this. My yield is just under 10.7%, 10.64. The reductions mostly came or, got a little bit lower because of the crypto or the distributions. I had to lower them a little bit. They might even be lowered again next Unveil, simply because, again, for these two, this is the average based on the last three distributions. So my total invested, how much money I put in, $659,500. My portfolio value, just like I showed you in passive, is $592. So overall, I am down on my portfolio value, but remember, this is completely unrealized, and most of the value that's gone down is attributed to actually the covered call crypto ETFs. It's pretty much 80% of the value. So I'm not too worried about it. Don't forget that this is completely unrealized, and it doesn't count the profit, right? So overall, this is the totals of my portfolio. I updated it. So again, check out my video yesterday for an explanation of this. But total income I received is almost $207,000 of passive income I've received. Capital gains realized is 108. So my total profit is 315. So if you add this number here, which is what my portfolio is actually worth, plus the profit I've made throughout the years, realized profit I've made, you're looking at 907. So as long as this number is higher than what I put in, I'm ahead. So I'm way ahead. I'm like up 40% if you actually count my passive income. Don't forget, guys, if you're an income investor, the key is the income, not your portfolio, how much you put in and what your portfolio value is. That's completely unrealized. You have to remember all that income you're getting is profit to be added. And this is really why I did this, and I wanted to show you. So overall, I couldn't be happier. This strategy is definitely working out for me. It's boring, but it's working. Every month that goes by, I'm making almost $6,000, and that's just going to keep going up and keep adding to my income received here, which will keep increasing my total profit. So overall, $58.49 a month with a 10.64% yield. Very, very happy. As long as I'm making over 10% yield every year, I'm happy, because in my eyes, it pretty much is doing what the S&P 500 does, which is about 10% every single month. So there you have it, everyone. That is my portfolio from A to Z, and we'll see you next month where we're going to revisit this and do this all over again. And hopefully by update 346, hopefully I'm still alive by then, you'll have the confidence to understand how this strategy works and that it does work. See you next time. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals. And it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website, on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I am not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.